Well, the Fed has spoken, and it's good news and it's bad news. Well, the when they met back in December of 2024, it was the last on the 18th. It was the last time that they met, and they dropped rates by only a quarter point. And it signaled that they signaled that they won't be dropping rates really that much in 2025 as they had originally planned. And remember, if we were to rewind to 2023, they had said that they were going to anticipate six rate cuts or more in 2024, and that just didn't happen. In fact, there were only three consecutive ones at the end of the year, and they were really half of the number of cuts that they expected, and it was only maybe a full point, if that. To speak to that though, you have to say, well, why is that? Well, it's because the economy is too strong. That's right. Unemployment rates are still low, and people are still busy, spending money on stupid stuff. It's the honest truth, right? So, what does Dave Ramsey always say, right? I mean, he says that, we spend money we don't have on things that we don't need to impress people that we don't even know or don't even like, or something like that, right? And so let's talk about that, right? So I'm Realtor Bert Tade. I'm also broker owner of Santino Properties LLC here in San Antonio, Texas. So I want to thank you for watching my video. Hopefully you'll find this information helpful and interesting. And I appreciate you subscribing to the channel so you can get alerts when other content comes out that can be of service to you. So let's talk about some economic truths. Let's start by doing that, right? So inflation seems to be ticking up again, right? And so the Fed, the Federal Open Market Committee, right? They're the Federal Reserve. They will basically keep the short-term rates steady, but all the while they've been keeping the short-term rates steady, and we'll talk about that a little bit more. Well, guess what? In the meantime, the long-term rates, such as the mortgage rates, have been going up. So basically, what they do to combat inflation is that they have that this overnight funds rate that they can kind of turn up and down as a dial, right, to slow the economy down or speed it up. But why is it that mortgage rates have gone up? Well, remember that the Fed controls the overnight borrowing rate, right? That's that federal funds rate I'm talking about is what the banks charge each other for overnight lending. So this will influence a variety of consumer debt, such as auto loans, variable rate loans, credit cards, things of that nature. And the federal funds rate or the overnight funds rate really loosely influences mortgage rates because it's mainly governed by the yield on the 10-year Treasury note, which, by the way, has remained pretty steady over the past couple of years, that yield. So, over the past couple of years, however, we've seen that both home prices and rates have gone up. So all the while, this has caused folks to stay put, right? They don't want to make a move. I mean, who can blame them, right? In some cases, I've even heard that for the past couple of years now, that people are waiting for rates to go lower and for home prices to go lower. Well, I've got over 10 years experience in the real estate business, and I can tell you that there's a news flash here for you. I'm afraid it's never going to happen. You don't ever get rates go down and home prices to go down concurrently. It just doesn't happen, right? I've even heard some folks, over the past couple of years say, well, they're waiting for a crash, in the real estate market for them to make a move. I've heard that plenty of times as well, but that's definitely not going to happen because we've seen actually prices go up, home prices go up. So maybe, just maybe, with all this stuff, because things have slowed down in a real estate marketplace here in San Antonio, maybe only a third of the listings as of last month that I'd studied this very, very carefully. Maybe a third of the listings even sold. That's a terrible number. We're talking, 5 months of inventory. It's really gone up quite a bit. The average days on market are like 76 or something like that. That's like 2.5 months average days on market before a property sells. So maybe, just maybe, we'll see a correction, right, because of this slowing real estate market here in San Antonio. But we're talking like maybe 5%, not even 10% in home prices. I mean, I don't know. I mean, I just as an educated guess, right? Because nobody has a crystal ball. Let's face it, right? I mean, nobody can tell you definitively how much home prices will go up, how much they'll go down, the rates and so forth will go up and down. And let's face it, though, this is a concept I really want for you to take away from this video, which is that there's a big difference between two completely separate things that you're buying. You're buying a home, yeah, but you're also buying a mortgage. Let me give that to you again, because it's a very important concept that we'll be going over, right? When you're buying a house, sure, you're buying the house, but you're also buying a mortgage. So remember, when home prices are going up, it's probably because rates are coming down. We're going to talk about that quite a bit today. And it's because, more people are bidding on the houses because more people can afford the home because the rates came down, right? It's what we saw during the pandemic years, right? Because let's rewind to those years, right? And mortgage rates were going down to incentivize people to buy a home and to stimulate the economy, right? And oh yeah, and by the way, the government was mailing out checks to people. It was free money. There was free money just running like crazy in the streets, and they were subsidizing businesses and PPP loans, and that were forgivable and all that kind of stuff, right? Money was free for a while there, and likewise the interest rates came down, which means the borrowing money was free practically, right? Unfortunately, things became overstimulated, right, with these low rates, and tons of people out there were looking to buy a house as a result. And what happened with those low rates is that consumers had to overpay for houses. $20,000 over asking price, $40,000, $50,000 over asking price. In some markets, we even saw, not in San Antonio, but other markets, we even saw $100,000 over asking price. One of the craziest things that I heard during those years was in Austin. Somebody wanted a listing so badly that they offered to buy the seller their next house for them to sell that listing to them. Can you imagine? It's just crazy. I mean, we're talking waiving inspection periods and stuff like that. I mean, crazy stuff, right? So we've seen all this before. When rates go down, yeah, it seems, yeah, like it must be a good time to buy. But then you'll have to pay, $40,000, $50,000 over asking price, and then you're writing, 7, 8, 9, 10 offers and don't get any of them accepted. But I want for you to follow me here, right? Keep this in mind. If you just celebrated your 200th birthday, then only once in your entire life did you ever see that happen. Okay? Only once. So let me ask you, it's a simple question and it's a legitimate one. Like, so are you going to wait for the next global pandemic, the next worldwide catastrophe to take place to buy another house? Are you going to wait for an economic catastrophe to buy another house and to decide to move? The government has to step in and start sending out free money again. Is that when you're going to change your housing situation and decide what's best for your family? Because let's talk about what is normal, right? Because there's a normalcy going on right now. The rates, I don't know. I'm not a lender, but I don't know where the rates are at exactly right now. And I didn't even look it up to film this video. But let me just tell you, it's still, the normal rates are between 7 and 8%. That's right. Historically speaking, the 30-year fixed mortgage is, when they start, and going back to 1971 when they started to track this, is 7.76%. I'm a nerd for this kind of stuff, guys. And yeah, I did a study on that a while back, and I determined that it's right between 7 and 8%. That's normal, and that's probably where they're at now. Well, maybe seven, I don't know, something like that. But we have a short memory, right? So remember that the Fed's role in all this, is to track the jobs market, inflation, things like GDP, right, gross domestic product, things of that nature. And then they use that aforementioned overnight funds rate, to dial up or dial down to influence which way the economy is going, right? And all this in turn, is going to also affect the Treasury bill, which is really what affects mortgage rates, right? So we talked about that already. But remember, if you're preparing right now, or just getting started in the process of buying a home, you're thinking about it, right? Just remember what I said, that you're actually buying a house and you're signing on a mortgage. Those are two separate things, right? And keep in mind, there's the house that you're buying, right? That's the price you're going to pay. Period. Nobody's going to come back through and renegotiate the price of the house. You bought the house already, right? But then there's the mortgage. This is the price that you're paying now, but remember, you can change that anytime. Now that can be changed, which is really cool. You can always refinance when rates go down. Right? So what if you bought it now? Let's just say a $400,000 house, and the rate is 6% or 7%, 8%, whatever. Well, you can always refinance, but you can have your house now. And let's just say that house is $400,000, and you decide not to buy it now, and you wait till rates come down again. Then how much do you think you'll pay for that $400,000 house, right? So instead, you're better off locking in now that price on the house, which cannot never be changed. That's it. You pay what you pay for it, and eventually refinance. Because I don't want to pay $50,000 over asking price for a house, and miss out on my favorite home or the next best home, and maybe even end up with the fourth best property, because you're just hoping for a deal to happen, right? Because people are overpaying for houses again, right? Because when mortgage rates come down again, let's just say, anything in the fives, forget about it. Things are going to go nuts. There's a lot of pent-up demand. So now, maybe you just you settle. You end up with a house that's like your fourth or fifth favorite house. It wasn't the favorite one, right? Listen, it's real easy to say, look, I'm just going to wait for home prices for home prices to go down. Okay, if you wait for home prices to go down, well, then if that's the case, then we pretty much know what's happening with rates. Rates are probably going to go higher, right? Because remember that when rates are coming down, it's probably because house prices are going up. And because we know that more people are going to be able to buy, it'll make you overpay. Because I'm telling you, anything with a 5 on it, 5.99, they just hear 5, it'll make things go crazy again, probably, right? So let's hope that'll happen. That rates will come down again. Great, but then you can refi at those rates, not buy at those rates, because you're not going to get a good deal. You won't be negotiating $10,000 off of the asking price like you could right now. And repairs, you could be negotiating repairs like what I'm doing with my clients right now. If it's a builder, you want to buy a brand new house, where do I even start to talk to you about those incentives? I closed quite a few actually, new construction homes with my buyer clients last year in 2024. And every single time they were buying the rates down to where they are in the 5s. Heck, December, my clients closed on a $600,000 plus home. $600,000 plus home. Say that 6 times real fast. And their rate was 4.99%. I've seen some deals in some of the surrounding communities at 3.99%. I saw that over the weekend. I was checking my emails. Listen, reach out to me. I'll be happy to tell you where that's at, because that's a 3.99%. And they're giving $10,000 for closing costs. What? So now you have no excuse not to want to move, right? But remember, right now, it's if you can negotiate a great deal, and maybe you can use some closing costs that you can negotiate on a pre-owned home with a seller and buy down the rate, just like they're doing with the new construction houses. But if you wait for rates to come down, congratulations, it was 1% to 2% cheaper on your rate, but you paid an extra $20,000 on the house. You paid an extra $40,000 on the house. So I have a question for you. Do you think that you'll stay in the house long enough to see a savings in the interest that you pay over time by getting a 1% or 2% lower interest rate? Sure, you're going to save a little bit of money, on the long run on the interest. But will you save the $20,000 that you had to overpay? You're going to overcome that $20,000 deficit, which you came with out of pocket. How about $40,000 that you overpay on a house? $50,000 overpayment on the house up front, by the way, right? Because one thing's for sure, you're not going to get a good rate and negotiate a great deal in the house. It's just not going to happen, right? So will you even stay in the house long enough to recoup those $20,000 you overpaid up front? Because you saved 1% to 2% on the interest rate. Is that going to be over time? Over 5 years, 10 years? I mean, you're going to stay in the house longer than 10 years probably. Even if 30 years of interest for 1% that you save on the rate, are you going to even be able to reach what you overpaid over those 30 years in the savings in terms of interest savings? So you're not going to get a good rate on the house and negotiate a good deal in the house. Those two don't exist together. They just don't. So why not right now, while you still can negotiate a decent deal in a house, work on getting a good deal in the property, and if rates do go down, hey, listen, you're already in the house. You already got the house at a pretty decent deal, at a decent price. Negotiate repairs, things of that nature. You don't have to fight for the house. You already live there. Remember, you already bought the house, right? They can't renegotiate the house, but you can renegotiate your rate. Yes, you can refinance. And yes, it's going to cost you an extra $3,000 or $5,000, whatever, to refinance in terms of closing costs. Yeah, I'm not going to tell you it's for free, because I don't know if anybody else is educating you out there, but I'm going to tell you it's going to cost you some money. Yeah, sure. But it'll be worth it to you, because maybe you're securing another 30 years or even 15 years like I did when I refinanced, on a mortgage that's on a much lower rate when you refi. And, it's a lot better than saying, well, I just don't want to pay that refi fee. I don't want to pay those closing costs. I'll just wait till rates are lower. Yeah, but then I'll pay an extra $25,000 on the home price. It just doesn't make sense to do it that way. And I can assure you that paying, the closing costs to refinance your house, instead of refinancing your interest rates a lot less than what you're going to have to overpay for the house, which, by the way, is negative equity the minute you walk into that house, right? How long will it even take for you to recoup that negative equity and get back to where the house price should even be for the neighborhood, right? To catch up for the overpayment on the home. Oh, yeah. And by the way, if you're getting a conventional loan, listen, I mean, how long is it going to take before you achieve that 80-20 LTV, loan to value, which enables you to ask your loan servicer to eliminate that PMI, that private mortgage insurance, right? So that maybe you can save, $100 a month, $75 a month, $200 a month, whatever that PMI is, right? Because remember, once you get to that 80-20 threshold, and when you work with me, we follow that together over the course of a couple of years, because I always stay in contact with my clients, always. Just ask anybody who's worked with me; they'll tell you, "Oh yeah, no, he's in touch with me all the time." And and they consult with me, after the fact on everything from should I do this remodeling project? What's my ROI going to be? Should I install this or that? Should I get solar panels? I have clients all the time reaching out to me, but also the conventional loan buyers, if they didn't put 20% down from the outset and they have that PMI, they consult with me to say, okay, well, I can help them to say, okay, look, I think you're approaching that 80-20 LTV where you can ask your loan servicer. And by the way, they're not going to do it for just automatically when you get a 20% equity in the home. They're not going to do that. You got to reach out to a professional like me to tell you that you probably got about 20% equity now. Okay, but if you're overpaying for the house, how long is it going to take for you to get to 20% equity? If it's not just to break even, much less the 20% equity, right? So all of this I want to tell you is not about tweaking the system to make a sale, by the way. I'm trying to dispense some serious advice to you that now is an ideal time for you to buy. If you need to, or if you even want to make that move, right? What makes sense for your family? I don't know what the answer is, right? But since rates are always going to vary, why don't you just lock in the house now? Because, by the way, you'd have been a lot happier living in the house that you wanted 3 years ago, instead of what you've been doing, which is waiting, right? Because if you'd have been better off if you'd have bought the house that you wanted 3 years ago, because guess what? Rates never did go down, by the way. They never did. If anything, they went up. So if you've been waiting since 2023, 2022, you've been waiting for rates to come down. Well, guess what? It's already 2025. And you're still in the same situation because you've been waiting for rates to come down. So why don't we just go ahead and get the house that you want or that you need? And if rates come down, that's great. Terrific. But just remember, I don't think we're going to see a crash, certainly, right? Because we've been hearing that forever. Things will be just fine. Especially, with all the things that are occurring right now, based on the changes in the economy, what's happening, in the change of administration in the White House, and what's financing, national debt, consumer confidence. I mean, all those things, I think we'll be just fine. So we're not going to see a crash, I don't think. Maybe we'll see a correction, like I was saying earlier, but but getting in that property now makes a lot more sense, than waiting on that correction, which is, by the way, even if that happens, that's going to bring rates down again, like I said, and to compensate, and that'll bring people back out to buy again. And there we go. Things go crazy again, right? Giving over asking price, taking money, to cash to over pay above appraised value and all that stuff. Just remember, people were cashing out their 401ks to buy a house, to come up with a negative equity, really, to overpay for the house. To sell things, to be able to get the cash, to overpay, because not everybody's got the cash laying around, right? Now that was bad business, right? So let me ask you, are you waiting for that to happen again? Because I hear people say all the time, well, my friend got the home at 4% interest rate. Yeah, but look what he had to pay to get the house. Had to overpay. So that was bad business. Paying over appraised value and bringing money to the closing table because, that you're overpaying for a house. It's a bad way to buy like that. And it's going to be a bad way to buy like that now. Once rates do come down. But, is that what you're waiting for? The best time to buy a house is when you need one. The best time to sell your home is when you need to sell your home. And if rates go back down again, then yes, you can always refinance, right? Like I've been saying in this video, but you don't want to wait to secure the mortgage until it's low. Because if you wait until the mortgage is low, those rates are lower to secure a house, then house prices are going to be much higher. I want to educate you about this and help you make a better buying decision. And again, I'm not trying to convince anybody to move because that simply doesn't happen. Not me or any realtor in America is going to convince you to buy or sell, right? A homeowner to sell, a buyer to buy, a homeowner to sell and buy. You know, it has to be right. It has to be what's right for the real estate consumer, right? But if you'd have done it back in 2022, you probably would have been a lot happier by now. And you know, by the way, they still haven't had a chance to refinance. You know, because rates haven't dropped enough. But hey, you know, you don't want to wait to live the American dream. You know, be in the home instead that best fits your needs. And maybe if you're a renter that's tired of throwing money away to make your landlord rich or to pay their mortgage every single month instead of paying off your own mortgage and building equity in the house and building a nest egg for yourself or perhaps for your family because you know you're waiting on some fictitious thing to happen. So I hope you're not waiting for this global pandemic. You know, it's going to happen again, waiting for that to happen again. Let's instead be normal buyers and sellers, right? Because remember, it's a normal interest rate right now. So secure the home now, marry the house, and date the rate, you know, because you can always refinance. So I'm always available, you know, to discuss your options. It's a no obligation chat about what you should or should not do to proceed. You know, sure, I'm a salesperson, but I'm not just trying to make a sale here. I'm not trying to, you know, be sneaky or unethical or something like that. I mean, of course not, right? In fact, you know, in some cases over the past, you know, 6 months even, I've counseled, you know, some would-be sellers to actually stay in the home, you know, or if the house is vacant, then rent it out. But why is that? It's because every single situation is different. I'll tell you, I'm always going to dispense the advice that makes the most sense for the consumer. That's how we serve the public at a high level, right? Because, for example, you know, if there's way too much inventory for an area, right? If there's too many houses on the market, then there's too much competition in the neighborhood. You know, for the home to perhaps stand out in any meaningful way, unless there's something super, super like a sizzle feature that's super cool that would make that house stand out, that would cause it to sell. All right. Or a special price that would cause it to sell, right? Or maybe it's just because, you know, life happened, you know, that I might dispense, you know, some good sound advice to rent the house out, right? Like I did to a new client of mine. I'll tell you a story. You know, this gal has been here in Texas for quite a few years. She's originally from, you know, out east. And she just wants to move back home, or she has to move back home, whatever the case is. And I told her, I said, look, I mean, you know, you got to move out of San Antonio. I get it. And you just bought the house brand new 2 years ago from the builder. Well, guess what? If you try to sell it now, you're going to be competing against the builder that built your house because they're still building in that neighborhood. Or maybe you're competing against another builder. You know, and it's going to be a similar sales price. And guess what? You know, people are going to want to buy a brand new house so they can be the first owner, so they can have the warranties involved with the brand new house, brand new construction, instead of, you know, buying a used one. So that's a tough sell right there. It's a tough competition to try to sell a pre-owned home against a builder who's offering warranties and rate buy downs and special interest rates and closing costs and all that kind of stuff, right? But every single situation is different. You know, and of the 19,000 plus, you know, San Antonio neighborhoods, you know, there might be something different going on there. So we need to have a discussion, you know, around whether or not a home sale would even make sense for you right now, if you're looking to move. But I'm happy to have that discussion, you know, because I think from a purchase perspective, right now is an ideal time to buy. I really do believe that. I truly believe that. So let's just talk about your options, right? Give me a call, send me a text. You know, my phone is answered from 8 to 8, 6 days a week. So feel free to reach out to me, you know, to chat, you know, with no obligation chat, just to see if maybe making a move, a possible move, hypothetical move would even make sense for you right now. But I'd like to invite you to tap into my expertise and my experience in the San Antonio marketplace, in the real estate business, 10 plus years. So thanks for watching my video. I hope you found this topic to be interesting to you, and my perspective of the 10 plus years of experience has been of service to you. I really do hope so. Don't forget to subscribe to my channel for terrific, free educational content, which I'm always updating on a weekly basis, by the way. I've got, I don't know, approaching 150, educational videos on my YouTube channel now, for example. And I'd like to help you maneuver through the hype, the hoopla, and yeah, even the media negativity surrounding our real estate industry. I'm Realtor Bert today once again. I hope you found this interesting and a great educational topic. Again, thanks for watching the video. I'm Realtor broker owner of Santino Properties LLC. Thank you for watching my video, and that's it for now.